Perfect. Fantastic. Well, welcome everyone. Good morning. I am so excited to be here with you guys. My name is Sharifa Muniz, and I am actually a proud graduate of Morgan State University, both in undergrad back in '98 and again for grad school in 2001. So being part of this HBCU entrepreneurship conference being held by Bowie State University. I am so proud to be a part of this. And having been an entrepreneur now, gosh, for almost 20 years, both as a co-owner of a health IT consulting company based out of Maryland, and again, as a nonprofit founder, I can tell you firsthand that fundraising is so critical to business and also on the nonprofit side. So today we are going to be chatting with some amazing entrepreneurs, amazing individuals on the art of fundraising. And I have to start by introducing, first of all, it is our self-proclaimed problem solver himself, and that is Rico Moore. Rico,
Hey
hey.
there.
And then we also have the founder of Her Ride, and that is Jillian Anderson. Hey, Jillian.
Hello, everyone.
Fantastic. And then we also have the CEO of LA Executive, and that is Ronald Falls Jr. Hey, Ronald.
Hey, everybody. Good morning.
Fantastic. All right, so I am going to ask each of you to introduce yourselves. So let's start with you, Jillian. You know, we're going to start with our lady first. Tell us a little bit about you and about Her Ride.
So, okay. Jillian Anderson, born and raised. Well, I'm not born in Athens. I'm from Athens, Georgia. Played 3 sports in college, so I'm actually a jock, slash tech nerd. What led me to starting Her Ride is because I moved to Atlanta and I started driving rideshare because I was trying to go pro for basketball. And I noticed that a lot of women kept telling me over and over again that they rather ride with women or that they were canceling rides until they recognized the woman's name. And me being a natural problem solver, I saw a problem that needed to be solved, and so I decided to solve it. And so that is a little bit about my background. Yeah.
Thank you, Jillian. I love that. So you saw a problem, a need that you were having, and you started your business solving that problem. Love it. So we're going to dig more. So Rico, let's hear a little bit about you.
My name is Rico Moore, born and raised in Daphne, Alabama, so right south of Mobile. I went to school in Philly, had a very circuitous route. I'm currently a software engineer at Kickstarter. Um, I did my first startup right after I graduated college. It was a YouTube network called Omnia Media. So I ran tech there. I didn't know anything about business before I started that company with my co-founder. So that was kind of my real world MBA. After that company, I was managing engineers but couldn't code. So I did a boot camp back in 2016. That's where I learned full stack JavaScript. I was at Blavity for a little bit, running video for them. Then I ended up at BuzzFeed. Wasn't an engineer first, ended up kind of moving into engineering at BuzzFeed after doing a bunch of different roles there. Left to do a palliative healthcare startup for a year. Didn't like healthcare, so came back to media. And then I ended up at Kickstarter, what was it, July last year. And during the pandemic, while I was at BuzzFeed, I started another company called Pipeline. So it was originally a talent marketplace for hiring animators because when the pandemic hit, there was a big need for hiring animators. But post-pandemic, they started laying all the animators off. So now we've kind of like shifted into building basically kind of like a TikTok for animation. So we're trying to make it as easy to make animation as it is to make a live action video on TikTok. So that's my spiel.
All right, we got a serial entrepreneur here in our hands. I love it. All right, Ronald, can you introduce yourself for us as well? You're on mute, sir.
Good morning, everyone. My name is Ronald Cache Falls Jr. I am a 2000 graduate of Morehouse College, where I studied physics and mathematics. I've been in financial services my entire career. I went to Goldman Sachs after Morehouse and focused on technology before going to law school. Ended up going to the University of Michigan, Go Blue, where I also studied transactional work and spent my time focused on mergers and acquisition and capital markets. Went to work for Skadden Arps doing cross-border M&A work after law school. And then I moved to Singapore in 2006 to do capital markets work for Latham and Watkins. So spent a lot of time in Southeast Asia. Lived in Singapore for about 7.5 years, doing different types of finance raisings across the region. Moved back to the U.S. at the end of 2013, beginning of 2014, and took over an asset management firm. First as the general counsel and then as the chief operating officer. A post-advisory group based in Los Angeles, California. Was an $18.5 billion asset management firm where we manage credit and high yield bonds and bank debt, which is sort of my structuring expertise. Decided I wanted to leave Wall Street. I was tired of a lot of the work that I was doing that wasn't beneficial to the community, and enrolled myself in an accelerator program and became an angel investor. Started the LA Executive 9 Consulting Company with the intent to represent and invest in underrepresented minorities in different technological spaces. So since 2021, I've probably made about 25 different investments in different spaces in tech, consumer packaged goods. Have invested in Crowns and Hops, the beer company. Work with Latimer, the artificial intelligence company. Have invested in most of the big AI deals in some way, shape, or form that makes the headlines. And just trying to make some sort of impact for Black entrepreneurs and minority entrepreneurs, and one day at a time, one check at a time.
I love it. Thank you so much, Ronald. Actually, my nephew just started his freshman year at Morehouse, so exciting. Love it. All right, so what the numbers currently are saying is that about 40% of Black-owned businesses report that funding is the biggest barrier to growth, period. And I'd like to start this question with you, Ronald, if you don't mind, just based on your background, not just also as an investor, but also as a founder yourself. And that is like, what are some of the top qualities or metrics that you look for in a startup, especially as it relates to a minority founder? What would be your advice to those individuals who are looking to get into entrepreneurship, or who are entrepreneurs themselves and are looking for funding? Because it's actually an art and there's a skill to it. So I'd appreciate your perspective on that.
I will definitely say this before getting to sort of the metrics of the unit economics. I'm usually betting on the founder or the founding team. It's usually something about those individuals that have assembled to solve a problem that tells me that they have either the raw skills or the tools, or they're on the path to doing something that is worth investing in. So that's at the initial conversation stage. But when we start to get into the due diligence of what the business is actually doing, the thing that I want to know more than anything is, does the founder understand their numbers, their metrics of what profitability, engagement, and outreach look like? How do you measure success in your business? And what does success look like over certain time periods? So we're talking growth month to month, year over year. What does it look like when you take capital from a person like me into your business and you deploy it? Is the use of those proceeds going to result in some sort of increase in value in your business or expansion that you can point to your unit economics and show me? If you give me this money, I will increase my subscription base this much. I will expand my production capacity this much. I will engage this many new customers. I write checks at an early stage, usually pre-seed, seed, or Series A. And so my expectation is that you don't have it all figured out. I'm making an early bet, and there's a lot of risk in there. But I need to see that you're making progress on your numbers, and the numbers that matter specifically to your business. And as the founder, you should be able to explain your numbers and your metrics to me, and why those numbers are specifically important to your business. When you can't do that, I'm very apprehensive about giving you a check, because if you don't know your numbers, then that means that you don't know your business.
Wow, I love that. As you all are hearing, know your numbers, y'all. before I ask the next questions, I want to encourage you guys to submit any questions you guys have in the chats. We are going to be leaving time for questions and answers. The more questions you guys submit, those are the questions I will be asking. So please feel free to go ahead and do that. Now, just stemming from what Ronald just said, the next question I have is actually for you, Jillian. As a founder right now, founder of Her Ride, you've just heard what he said about, the importance of knowing your numbers. But my question to you is, as a Black female founder, are there any specific challenges that you've experienced, you've run into that, and how did you overcome them?
Yes, for sure. Black women founders receive less than 1% of VC funding. So going into starting Her Ride, I knew that. And so I knew that VC funding shouldn't be my first approach when it comes to trying to fundraise for my business, because I knew I was going to get hit with a lot of no's. So one of the biggest challenges for us, of course, is funding. And so I just had to get creative with it. I realized that I'm really good at talking. I consider myself a professional yapper. And so I started looking into pitch competitions. And once I got into pitch competitions and started winning, it started boosting my confidence. And it was also a form of non-dilutive funding. And so just having to be more creative, using social media for my advantage. We were having, there was a situation that happened where we got approved by the airport. So we're the third rideshare company to be approved by Atlanta's airport. And once we received approval, there was signage, there was official airport signage that said rideshare, and then it had Uber and Lyft's name in the airport. And so I kept letting the airport ground transportation and the marketing department at the airport know. I'm like, hey, can you guys throw our name up there, so that people know that we're a real business, because we're not as big as the other names. They gave me a lot of pushback on it. And so at the beginning of this year, I decided to get on Twitter and post a video of myself in the airport. And I'm like, hey guys, don't y'all think that Her Ride's name should be up here, just like Uber and Lyft's? And within an hour, the airport's Twitter page reached out to us. So knowing that, like, just using social media to our advantage to get the people and the community that I've built behind us really helped us.
I love that. I love the fact that you were really proactive and truly speaking, to what you saw as a need, truly speaking and asking the question, right? And I absolutely love that. So I think right now my next question is going to you, Rico, and I would love for you to speak using the HBCU lens as it relates to what your perspective is from a crowdfunding perspective, because you work with Kickstarter right now. So you're in that crowdfunding space. How do you think that as HBCU founders, we can truly leverage crowdfunding as an art form in raising much needed funds for our businesses?
Yeah, definitely. Well, I guess, to zoom out a little bit, there's certain things that kind of work on Kickstarter and certain things that don't work as well, just in terms of your vertical. So tabletop games, hardware, like design and tech is what we call it, comic books, like that type of thing. Generally, those projects do really well on Kickstarter. It's trickier to do things like a software startup. So, like Jillian trying to do a software startup for Kickstarter might be a little tricky unless you're able to figure out kind of like one, like kind of a good reward structure, or two, you're able to build your own audience behind that. So the thing about Kickstarter is, our audience, we have a big kind of early adopter audience, but they like to receive stuff. And so if you are going to go try to raise money on Kickstarter with a software product, you want to make sure that you're able to tell like a very good story, because there are software products that do get picked up, right? And through the HBCU lens, I think what you also would want to do is figure out like, how do I leverage the HBCU community to push this project, right? Because the thing is that all these projects have communities behind them, but it's really the job of the creator to organize that community and build the traction so that the rest of the people can kind of like see it. So I would say that's like the big one is pick a good niche, right? Put a good story together, and then do your best to leverage the network that you have access to, as an HBCU alum, to really kind of organize people behind it and get there. And if you are able to do it, it's great because one, it gives you the traction that Ronald's been talking about. And two, it gives you that non-dilutive funding, right? And I think in this game, a lot of Black entrepreneurs, we end up taking deals that we shouldn't because our options are limited. And it's really, really important that we explore all different options where we don't have to give away a big chunk of the company, in order to get the traction so that finally we have leverage at the bargaining table when we want to go for broke and get those big checks.
I love it. I love it, Rico. Thank you so much for that. And I love what you said about the importance of crafting a good story. And I do want us to talk a little bit more about that. But Ronald, I see you have your hand raised up. Did you want to chime in on that?
I did. I had a point I wanted to make specifically about crowdfunding because my firm, L Executive 9, specifically works with founders that are raising money on crowdfunding platforms like StartEngine and WeFunder. One of our portfolio companies, Crowns and Hobbs Beverage Company, actually is a consumer packaged good company. It's a beer company, but they led a crowdfunding campaign and were able to raise over $1 million. Now, the part of the campaign that was most important, as I was saying, is the story that was being told about the company and what they were doing. And the story turned into a social media campaign that generated a lot of goodwill and helped them to raise money using the StartEngine incentives and platforms. And like I say, there were giveaways. As we hit certain milestones for raising money, people got different types of swag. They got different types of things. They were invited to certain activities. But it was all a campaign that was run to raise the money. And so once they had that money in any other sort of fundraising endeavor, they have to then figure out what to do with it. So I think if you are using crowdfunding strategically in your fundraising journey, you can use it to build brand equity, brand awareness, but also a community. So all those people that participated in that StartEngine campaign when it happened, they're all shareholders. And so now they're part of the community of that business. And as you tell the story of that business, you also get to tell the story about the community that are also shareholders. They become your brand ambassadors. I think that's the most powerful thing that you get from the crowdfunding if you do it properly. Those people that invest in your business then ultimately become ambassadors for your business. So they've written you a check, but they're also out articulating the good things about your business when you're not present. So I would encourage people to look at crowdfunding as a part of a larger fundraising strategy. Eventually you do want to get to the point where you can go have those conversations with the big boys, and you don't want to give everything away. You want to have leverage. The best way to have leverage is to have a business that is able to sustain itself, or a fundraising strategy that don't require you to have to agree to erroneous terms in order to get money. You don't have to be desperate if you have strategy.
No, those points are so well taken. And I also appreciate the fact of, as you're starting a business, having a community behind you, truly having your tribe behind you, because now all of a sudden, everything you do, it matters to them. And even as you go in and you are looking to maybe then get more funding that might be more diluted type of funding, but they see that you have this huge following and they're like, okay, more sold to that. But there's something that both you, Ron, as well as Rico, you talked about, and that was the story and the importance of that story, because to even have people come behind you and support you, they have to buy in to your story and buy into that need. So my question to you, Jillian, is, how have you found having your story has been important? What have you done to truly craft your narrative? And have you found that, especially from a HBCU perspective, have you found a way to craft a narrative that can truly resonate with investors? How have you gone about that?
Yes, so I am actually super control freak about controlling my narrative. And so I was very, very diligent or deliberate with the way that I guess, appeared or presented myself as my business. When I originally started Her Ride, my former co-founder was the face of the company. And I made her the face of the company because I just understood how the world works, if that makes sense, right? We're all in the room. I'm a dark-skinned, masculine presenting woman. And so I knew that if my co-founder, who is more feminine looking, she's lighter complexion, I knew that the world would accept her being the face before they accepted me being the face. And I was right, because we actually proved that theory by going viral on Twitter. There was a trend that was going around during COVID where people were posting themselves, a picture of themselves as the founder, and then a picture of themselves or whatever their business was. And I told her to do that. I told her to post a picture of herself and then post the logo of the business. We went viral that day, over 7 million impressions. Even since her leaving the company, any article that I've done has not received as many impressions as that one post that we did that day. And so that just shows that just shows how true the world perceives us. And so moving forward, even after she left, I really wanted to focus on my story being authentic, right? I wanted to be organic, authentic. I always appear as myself. When I do interviews, I'm usually wearing a hoodie, I'm usually wearing jeans, and I'm wearing my Nike Dunks because that's who I am. That's who I always been. And so I really feel like it helps with my story. Even when I tell my story to people, people always come up after me and they're like, I really appreciate how authentic and real and genuine you were. And so that's what I just try to stay true with. I don't try to act like I'm bigger than what I am. I don't inflate my numbers. I don't do anything like that. I just stay true to who I am and I show up as my authentic self.
Wow, Jillian, thank you so much. I'm reading the chats here, and I think Shelley said it's a sad reality, but very true. And truly, authenticity is key because people will see right through you.
Yep.
Yeah, that is so true. So I see here we do have some raised hands with questions. We will be coming into the Q&A session in a bit. So Virginia, if you have a question, put it in the chat and I'll give you a chance to ask it a little bit later. So thank you so much for that. So right now, we've been talking about, and I think Ronald, you mentioned, and I think Rico, you said the same thing too, in terms of diluted versus undiluted funding, right? And a lot of us, when we start, and I think Jillian, you mentioned the same thing. You said you start with pitch competitions and things of that sort. And so, what's your perspective as it relates to, starting off bootstrapping, right? Versus seeking external funding. When do you think is going to be that sweet spot to really go there? And Ronald, this question is for you.
I think it's tough. This is again knowing your business and what it takes. Some businesses are more capital intensive than others. Some businesses are low tech and don't require you to raise a lot of money to kind of get started. So I think you have to understand that when you're going into a business, if it's going to require you to raise capital, you're going to have to be mindful of that. If you have a business that does not generate revenue or profitability and you're dependent upon fundraising to run your business for a period of time, you have to factor that out into the time allocation of what you're doing. As a CEO, you're the chief representative of the firm, you're the chief cheerleader. You're going to constantly be in a situation of raising money or trying to sustain your business from day one. So if you're bootstrapping, you're paying for it and you have the ability to do that, you're working your day job while you're being an entrepreneur, or if you're a full-time entrepreneur and you have the resources, the funding of the business is always the most important. The dream is there, but ultimately you're in business to have a successful business, not to simply have a company or a brand or to be the CEO of one. You want to be able to build a company and hire other people, empower people in your community, and direct resources in ways that align with your values. So you're going to always be raising. So I think you don't really stop that journey. Even after you raise money, even if you go through a fundraising round, you usually, as a CEO, are starting to think, when is the next time that I'll have to raise money? Because when you raise money in a round, you're telling the investors, I'm going to take this use of proceeds and use it over this period of time, 12, 18, 24 months. But then you're either going to have a business that is self-sustaining, or you have to come back and raise money again. So if you know you're going to come back and raise money again to scale, you already are thinking about, I got to go back and do this fundraising journey. You have to be building a team. As a CEO, your focus will be on telling the story and keeping the money going towards your business, but you have to find other people to be the operators. You need people who can handle the finances. You need a CFO. You need a lawyer. You need other people within the ecosystem. You have to go to the places where these things are being built and the ecosystems are being created. The local accelerators, the places where the pitch competitions are happening, the centers for entrepreneurs that give away money, the schools, the institutions that are looking for CEOs and executives like you to help you, the Bowie states that want to provide funding and match you with the ecosystem. Go seek those places out.
Mm-hmm.
Could I tack on to that?
Absolutely, Rico. Go ahead, please.
All right. So I think Ronald is spot on. And also just in terms of what I would say, what I've seen from other founders is I think there's a certain romance to fundraising versus bootstrapping, right? I think a lot of companies look at being able to raise funds as like a seal of approval or some kind of badge of honor. I was able to raise X amount of money from a VC, right? But at the end of the day, if you're raising VC money, VCs are looking for giant exits, right? And they're expecting you to fail. VCs are coming in, writing you a check, expecting you to fail because, they really only need like a 1 out of 100 hit rate in order to get their fundraise. Oh, Ronald says even less than that. Oh, you're muted, Ronald.
I was going to say it's 1 out of 10. For every 10 companies we invest in, 7 of them we expect to bite the dust. 1 to 2 we expect to return, and 1 we expect to just hit out of the park and return the value of the entire fund.
The home run.
So 1 out of 10 investments is going to be a winner.
Yeah, so they're expecting you to fail. And I think what a lot of entrepreneurs today kind of lose sight of is how big is my company actually going to be? Like this thing that I want to build doesn't need to be $1 billion business, right? Could I build a $20 million business that does some good in the world and I can sell for cash and, ride off into the sunset and do something else? I think it's a lot easier today to bootstrap a company than it's pretty much like ever been in history, especially if you're technical. We're at a place today where, I think the last big shift in technology, technology opportunity was maybe when the App Store was released, right? You had all these developers on the same playing field because nobody had been building for the iPhone yet, right? So everybody's on the same page as I can build a lighter app, I can build a social app, I can build a whatever app, and we're all learning this new technology at the same time. AI, ChatGPT is basically the same thing, right? Except it's even better because you've got access to foreign devs who are super cheap, or if you know how to code yourself, right? Even just a little bit, you can ask ChatGPT, like, how do I build this thing? For Pipeline on my company, I've built this thing like 3 times now. The newest iteration I built in in Unity, which is like a video game software platform thing. And it's basically like an animation editor in Unity. I built the MVP in a morning using ChatGPT, right? So like you can get your thing built and you can find users without spending any money. And I think a lot of people want to raise that money. Really, they want enough money just to work on it full time, right? And if that's all you need, you don't need to go raise a ton of funds, right? You need to figure out like, what's my burn rate for 6 months or 12 months? And how can I go find that? And if I can't find that, then how do I turn this thing into some money, right? So that I can at least get a little bit of traction to then go get that. But if you get caught up in this like fundraising rat race, right? Like the market is so much tighter now than it used to be. You can put your money in a high yield savings account and get a much better return than you would on a startup. So, like I'm a big fan of bootstrapping. I think we need more support, within the community to help each other bootstrap, right? And especially like HBCUs, if you're looking for early users and stuff like that, like we should all be using each other's products, right? Like, so I just want to say, don't feel that you have to raise a ton of money, right? If you don't have to, especially if it's like a small little tech product. Like I think that there is such a big opportunity to start generating revenue quickly, get that traction, and then find somebody who believes in you enough to pay you for a year to try this out.
Listen, Rico, I think everyone's giving you claps and thumbs. I mean, you just really hit that out of the park. And just talking about community, which has been something that's just been resounding with everyone here. I mean, right here, we are a community. HBCUs, we are a community. And so being able to tap into each other, what we're doing right now, that's what it's all about. So you are so spot on. And I know, Jillian, you had your hand raised, so I know you probably wanted to add to the conversation. So I'm going to have you do that. But I did also want you to also talk a little bit about one of the things that Ronald had mentioned earlier on was one of the first things that he looks at when he is evaluating a company is the founders. He looks at the team and all of that. And you just told us about your co-founder and the situation with your co-founder. So my question to you is, right now, what are you doing in terms of team building? How important is that to you to have the right team around you within the larger community and HBCU community?
Yeah, it's great. That's a great question to ask. My current co-founder, we went to the same HBCU. We went to Albany State together, and I actually was her RA. And so
I love it.
I know, right? The irony of that is crazy. So for me, being a member of a team is everything for me. I played 3 different team sports when I was in college. I was volleyball, track and field, and basketball. So being on a team, having a role has always been something that is vital for me. And subconsciously, I didn't realize it, but my team currently consists of 3 individuals. So it's myself, my co-founder, and my head of process. She's over all of the drivers. And we actually had a get together around my birthday, and I realized that all of us had played team sports at some point. I didn't know that, but I realized that when we all sat down and we're just talking, I was like, that's why we all work so well together, because you guys know what it's like to be on a team. You know what it's like to have a role. And so for me, that's probably my biggest thing that I look for right now with building my team, being that we're so young. I'm looking for like executive positions. So it's like, I'm looking for someone that can be led or knows how to be led, and also isn't trying to like just take over what I'm doing, right? Someone that knows how to play their role. And so I really look for that. And at the same time, I can't pay anybody that's on my executive team right now. So you got to work for free. So you got to be okay with doing that and understanding how sweat equity works and stuff like that. So if you've been a member of a team before, then you more than likely will be able to work with me. And so that's really what I look for, is someone that is a team, real team player. And then to piggyback off of the fundraising question, we're actually in that stage right now. I'm at work right now. I still work full time. And I bootstrapped my business up until that point. But right now we're in talks with a group of investors that want to come in at almost $500,000. And so I had to make sure that that amount of money is going to be enough for us, for the runway that I've listed. I'm not trying to pay myself too much as a founder. They literally were getting on me because I was trying to take a pay cut, and they were like, "No, this is how much money you have to make. You're the CEO." And so just understanding that, working through that, but you have to be very, very, as a founder, you have to be very, very deliberate about what it is that you want and stand on that. I watched Super Pumped, which is about the guy that founded Uber. And the thing that I respect the most about Travis is how he did not allow the investors to disrupt his company. The way that he structured Uber with the dual stock structure, that was brilliant to me, because that's what happens a lot of times when you take on a lot of money. When you get money from the VCs, they want 40% of your business, they want board seats, they want all these different things. And it's like, whoa, I'm giving up too much control. So you want to make sure as a founder that you have a team that is going to stick beside you and then that's gonna work with you and not against you. And then that also knows how to play their role.
I love it.
I,
Thank you so much. I mean, that's
I
so
I just
Ronald.
wanted to say on that, please,
Yeah,
as
go
you are
ahead.
taking capital from these venture capitalists and from these investors as they are coming into your business, do not lose control or sight of your business. It is not worth it to take in capital such that you lose the direction of the dream. These people that are bringing you equity and are taking diluted capital should understand that they fit into a larger narrative. And if they really are betting on the founder and the team, and they're really investing in the team, they should be coming to be a part of the team, not taking over the team.
I love that. You know, Ronald, that was actually the question I had for you. So I'm going to ask you to dig a little deeper there. I was going to ask about some of the common mistakes and red flags that you've seen that a lot of our, HBCU founders are making, whether it's in building their team or whether it's in fundraising as a whole. And you just were talking a little bit more about not giving up too much control. So if you can just give us a few other things, red flags.
Definitely. I'm just kind of tying it all together from today, and I think you've heard it in a few different ways. If you're raising money, you're raising money because you need to for your business. You're not raising money for a vanity project to say that you simply were able to raise that money, because raising that money comes with strings. If you raise money from venture capitalists or outside structured financial groups, they do take board seats. They do take a view on what's going to happen with the business in the long term. Now, part of that is a give take. If I write you a check at the outset and I want to see your business eventually hit these numbers that you're going to hit such that I get the return that I'm expecting, then sitting on the board seat helps me to execute on my own fiduciary obligation with the money that I've given you. I can say, hey, these people are doing all the right things as they're going through and growing their business. But the problem is sometimes sitting in that board seat and having that capital committed, I may have a difference of opinion from the CEO about what's happening with the business when things get hard. And entrepreneurship is hard. And at moments and times where things get hard and you want to make decisions that are different from the people that gave you the capital, if you haven't protected yourself with a legal structure that allows you to still have decision-making authority like Travis had or like Mark Zuckerberg had, you could very well lose control of your company and be one of those CEOs that brought in all this venture capital and raised it, and then you ended up outside of your own business because the powers that be had more control at that level. And that's exactly what happened to Tesla. There are countless examples of where people have made investments in these businesses and then had disagreements with the management and the leadership team. You have to remember this. The board has one employee, corporate governance 101. The president and CEO is the one person who reports to the board. So that means that that's the person who's on the hook or on the line when things go right, go wrong, or go great. It's the CEO, but it's also the CEO will be the first person to lose their seat. Now, if you're the first person to lose your seat and you founded the company, just think about how that works. It could be uncomfortable. So you need to be mindful. I see people get desperate. The thing that I see with founders that is the most discouraging thing is the pursuit of all the shiny objects and all of the checks for the sake of the conversation, and not having a fundamental understanding of what this money means for their business, not just in 12 months, but in 3 to 5 years. How are you going to use this money to build an actual business? And as I said earlier, are you trying to build a business that's going to scale and go, through the moon so that you can exit, sale, or whatever? Or are you building a business to maintain? Are you going to grow it to a certain level and it's going to just be a thing that you do? And if it is, then you don't need to keep bringing in outside capital, outside investors, or doing all those other things. You really need to understand your business and what it is you're trying to do. Why are you an entrepreneur? What problem are you trying to solve? What ill are you trying to cure? And then be very diligent about maintaining that North Star as you bring in capital, as you build the team, as you develop people to, transition things that you do to them. You're trying to grow up and have a mature business. You don't want to be a startup forever.
Absolutely. So knowing your why as your guiding star is very, very critical. So I'm going to ask this last question that I'm going to ask you guys so we can leave time for Q&A. It's a question for you, Rico, and also a question that I welcome you, Jillian and Ronald, to chime in on. So right now, in the era that we find ourselves in, where the market is, really saturated, right? As a HBCU and entrepreneur, how can one stand out? How can one stand out from the crowd, right? So that their product, their business, the opportunity that they're offering can be taken seriously. And I would love to hear your thoughts on that, Rico, from a crowdfunding perspective.
Yeah, I would just go back to what my answer was before, right? Like it's the story. It's the story and it's the kind of community audience, followers, whatever you want to call it, who vibe with that story, right? So if you want to stand out, you need to make sure that, like Jillian said, you're your authentic self, right? That people really understand and believe that you care about the problem that you're trying to solve. And they want to have like a narrative, right? They want to say, this protagonist came up against this challenge and is now trying to solve that challenge in this way. And they're asking me to help them be a part of that. And I want to be a part of that, right? Like making them feel that in their chest. That is how you stand out. Now, how you find those people, right? A lot of different ways to do that. On Kickstarter, we're working on better discovery. It's not like the greatest platform to get discovered right now. So you got to kind of do a lot of that work on the outside. But like Jillian said, right? Social media, great place to find those people. Within your own community, great place to find those people. Doing it by word of mouth, whatever you want to call it. If you want to get real fancy, you can kind of build a little bit of a critical mass and then start sending that to media outlets, right? And trying to get coverage and do that type of thing. It really just depends on kind of like how big are you trying to go? How much juice can you get out of your own network? And then, can you get creative about finding other communities, other networks that resonate with what you have to offer, right? And then figuring out how to get to them. And, for the figuring out how to get to them, this is cheesy, but I would also ask ChatGPT, because ChatGPT, ChatGPT is a great marketer. Like if you need some strategy, do that. And then also, I don't know. I didn't go to an HBCU, so I don't know exactly kind of like how the alumni networking kind of works. I know we've got tons of people in the network, but also reaching out to other people, within your alumni network and figuring out like who knows how to do this kind of stuff, and then go ask them. Right? I think a lot of people don't take advantage of the people in their orbit or the people that the people in their orbit know, right? But the more you're actually just like out there talking to people, telling that story, honing that story, I think the further you can go, and that's how you cut through the noise.
No, I absolutely appreciate that. In fact, one of the things that I tell a lot of young people is the fact that when you're in school, when you're in college, networking is key. I mean, getting good grades is all well and good, but those folks in your class, those could be potential co-founders, team builders, funders. The lecturers, professors could be potential board of advisors and things of that sort. So I absolutely get that. So I'm not sure if Jillian, you or Ronald wants to chime in, but I wanted to start asking some of the questions from the group, if that's okay.
Yeah, it's cool.
All right. So we have here, the first question that I see here is from Carlos. Let's see. I know Carlos Thompson. He said, what are some of the most innovative funding strategies you all have come across that did not involve VCs?
I'll go ahead and knock that one out. So I did mention pitch competitions. I started doing that last year, and so I won around $40,000 to $50,000 in pitch competition. And then I started applying for grants. I apply for grants every Monday. It's part of my admin day routine. I go on YouTube, I search, what grants are available for me. I get on Google, I get on Chat. I call ChatGPT Chat. That's my homie. And then, we get it together and we are applying for grants. I apply to grants so much, and I've talked about applying to grants so much that people that follow me send me grants. And I love that. I love that so much because I talk about it so much on my social media that, oh, look, I'm applying to this grant, or that I'll share that I won this $10,000 grant. Now people send me grants. So I'm like, thank you guys so much. But that's what I do. I did pitch competitions, grants, and now what we're strategizing now and looking towards is RFPs, getting government contracts. So
I absolutely love it. And government contracts is a great way to go. And actually, the government has grants. You know that, right? The government
yep.
has grants as well. So that's fantastic. All right. So that was Tremaine. I'm not sure if there's any other question that I may have missed, but I only saw
That was
Carla.
no, that was the main one. I wanted to make sure we got to him.
Okay, perfect.
I'd
Perfect.
also add Kickstarter to that list of non-dilutive places to raise fund.
There you go.
Because I think a lot of people don't know that they can get money on Kickstarter. They don't know that when you raise money on Kickstarter, you don't have to sell a piece of your company. So it is a very good place to. It's one of the few places on the internet where you can find like millions of people who are willing to wait a year, but pay you right now. So if you do, if you do have a business that is capital intensive, right, or that you need to prove out early, it's one of the best places on the internet to find that money for pre-sales.
That's fantastic.
Yeah.
So in lieu of any other questions, you guys put it in the chats in case you have any other questions. But my question to you guys is, given your experience and given all that you know and all that you've done so far, what one advice would you want the folks here to take away with that I didn't ask as a question? That's one thing that you're like, as a HBCU founder, entrepreneur, looking to get funding, here is one thing you should know. Whether it's a word of caution, a word of advice that you would want our audience to take away with. And I'm going to start with you, Ronald.
I'm going to say this, and it's going to sound like hyperbole, but being an entrepreneur will be the hardest thing that you do as an endeavor. The protection of structure, the protection of systems and other things that people get the benefit of as an employee is a very different reality when keeping the lights on and running your business are your dual focus. You have to take care of both yourself and your business. And that is your reality all the time. And sometimes you will be making decisions about whether or not you eat and your business eats. And those choices are the choice of an entrepreneur on a regular basis. And those people that are successful as entrepreneurs have made it to the other side of those choices. Sometimes they have lost a lot of things in getting to that place. And they will all tell you that if you knew how hard it was when you started, you may think differently about doing it. But it is a worthwhile endeavor if you really have something that is calling you. If there's really something that you want to build, an idea that you have, then the pain of the journey is worth it. But it will be the most difficult thing that you do. I've worked with a lot of entrepreneurs. I've invested in a lot of businesses. And I think that the thing that always surprises them is how hard it is to be successful starting a business from nothing.
Wow, I love that. Jillian, next.
Yeah, so I agree with everything that Ronald said because I am that person. There have been days where I had to choose between eating or paying for something for my business. So he's 100% right on that, especially if you bootstrap. My piece of advice would be if you are going to attack or if you're going to become an entrepreneur, attack an industry that is scalable, right? I chose transportation because I knew it was recession proof. I also chose the rideshare market in particular because it's really a duopoly that's going on right now. It's only two major competitors. And so I live in Atlanta and you can go on any corner and find a wing shop, right? I can go get wings anywhere here. And so in my eyes, I looked at it, I'm like, if there's only two competitors right now at the top, what's a third one gonna do? Like, I can definitely compete in this space. And so if you are going to get into this space, please attack an industry that is scalable. And make sure that it's something that you are truly passionate about, and understand, as the founder, you get paid last. Do not be looking to get paid first. You actually get paid last, and you need to understand that, and you need to make sure that you are humble enough and that your ego is in check enough to really understand that, because there are a lot of founders that go out and raise that first million, and then they go upgrade their lifestyle on a whole different level, and they forget about why they even started their business. And so you don't want to do that. You don't want to become the founder that gets that first check and then we never hear from you again. You want to continue to build and scale, especially in industries that are scalable.
I love that. Before we go to you, Rico, I just want to read a few things in the chat here. Aaron said not to forget about paid public speaking as a form of raising. And Brooke is asking, what are some scalable industries? Because you talked about, Jillian, about, making sure that you are scalable. Ronald, you wanted to say something?
Oh, I was just gonna say, I think what Jillian said was spot on. And technology, on the whole, is one of those things that's scalable. And we live in an era where the technology is so accessible, and it's easy to educate yourself on these things and to see the patterns and the signals. I think people have to really take from that what she said. There's a duopoly that we all participate in. There's an opportunity for people to go into industries and businesses that compete with those businesses. All she has to do is to take away a percentage of market share from this duopoly to have a very large business. There's Coke, Pepsi, and then all those others right behind them. You know Coke, Pepsi, but think about all those other multi-billion-dollar brands right behind them.
Mm.
You just the industries are there if you think about the most intelligent way to attack the problem.
Absolutely. Thank you so much, Ronald. So the last question is for Rico. We only have a minute for you to answer because I'm going to be handing it over to Tremaine to guide us. But Rico, the question for you from Greta is, are there any specific AI tools that you use to prompt for fundraising?
Yeah, I mean, really just, ChatGPT and Claude. I would use those, and then just ask them about your fundraising strategy. But those are the two I would use. But last bit of advice for everybody, I would say, one, do you want to build a product or do you want to build a company? Two different things. If you're trying to get into the company building game and that's your idea, then you also want to think, how big a company do I want to go? You don't have to build a $10 billion company. It is 150% okay to build a small company that does something great and pays you $1 million a year. Like, you could do that. You do not have to build like a giant 50,000 person company. You could do that with like 10 people, 3 of whom are, devs in Africa. Totally cool. Like, that's fine. The last thing is, don't get distracted. You got to focus. If you're fundraising, focus on pitches to people who can actually give you money. Don't worry about, I talked to this person over here who said he knows that guy over there, right? That's not traction in your fundraise. You need to be talking to the person who can write the check, right? And talk to 100 of those people. And if none of them say yes, then you probably want to get some more traction or go back to the drawing board. But don't draw that out for like 6 months, focusing on that and not focusing on growing your business. Focus on the metrics that matter.
Oh, wow. Thank you so much, Ronald. Thank you, Jillian and Rico, for this fantastic conversation. And Jillian, if you can say it in like 10, 15 seconds, go ahead.
I definitely can. To anybody that just wants to learn the language of startup world or the startup world, I recommend watching the show Silicon Valley. It's on HBO Max.
There you go. Mic drop, y'all. So Tremaine, I'm going to hand this over to you. Thank you guys for the opportunity to moderate this fantastic, panel. And I hope you all got amazing nuggets out of it. I took a bunch of notes, guys. So
thank you for the conversation. That was great.
Yeah, this is great.
Thank you, guys.
So I really appreciate, this has just been so amazing. The chat is already blowing up. This has been so amazing. Thank you all for your time, your expertise. Thank you for all of the nuggets that you dropped, the insights. Listen, I am a 5-time founder myself. I started my first tech company 25 years ago. Some people on the line know me, and I picked up some nuggets, and I've done raising before, and I picked up some nuggets in this conversation. So just really excited to have such industry experts all on one panel. All right, I'm gonna put it back in the chat because it's going up, but I put the link for the next 2 sessions that are starting in 5 minutes. We have one, somebody mentioned AI, so you're gonna love this one. HBCUs in the future of AI. That is happening. We got some AI experts that will be dropping a whole bunch of game on what's coming down the pike and how you can get involved with the future of AI. The second one is breaking into big tech. We have Microsoft, we got HP, we got like some heavy weights from all of the corporations that you all want to participate with, or that you want to get, funding from, and all of the different things will be all on one line to talk about how to break into big tech. Jobs, internships, all of the stuff will be discussed. I am putting, again, these things in the chat. So all you have to do is leave this session and click the link to go into one of the other sessions, putting that in there as well. All right, right in the chat are the last 2, are the links to the next 2 sessions. So those will be getting started in 4 minutes at 11:30. Thank you all for our panelists. You all were amazing. Thank you for your time and your expertise. And we'll see you all in one of the next 2 panels. Thank you all so much for joining.
Thank you, guys.
Bye, Al.
Bye, everybody. Have a great day. See you on the next panels.
Bye.